Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, looking at the market rundown, SPY, IWM, and QQQ. So we rejected from the exponential moving average resistances today, and we had a very bearish end of the day. We've got all of this back and forth, wins the vote for the healthcare, blah, 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 and it does favor the bears with the indecision. So I was looking for weakness all day, and I had my hands tied a bit because we weren't getting weakness to start the day. We saw that the financial sector had clear strength, so that was a nice trade to be had in the morning. But then once the dump started, this is now looking like what I expected after the big bear volume and the all-out dump. This now looks like a bear flag where we have our bounce attempt, weak follow-through, no follow-through by the end of the day, rejection from the exponential moving averages, and the potential for continuation to the downside. Tomorrow's a pretty important day for how we end the week. We're looking at support of 233.60 and 233.05. If we break 233.05, that will confirm this bear flag, and we'll be looking down at the 50-day moving average as our next support level that the bulls need to hold, and that's going to be around 232. So a big upper wick of profit taking, momentum favoring the bears at the end of the day, and we are going to look for downside. And the psychology of what's going on here is the reaction is, in my opinion, if the president cannot pass the healthcare bill, then how's this tax reform that the market has been pricing in since his election? Very bullish on his tax reform and business ideas. If he can't pass the healthcare, how is that going to go forward? And again, that's not my opinion at all. In terms of what the president's going to be doing, all I care about is how the market reacts to things. And right now, the health care bill being unable to pass is being perceived bearish by the market. So looking for this continuation, potential continuation to the downside. And whenever I look at a potential bear flag or a bull flag, I use these exponential moving averages. And that's my proof, so to speak, where if the bulls can get over those levels, then it is a lot less likely that it is a bear flag. But if we reject and we can't get over exponential resistance, a bear flag is likely. Weekly time frame, bearish candlestick, the 8-week moving average, the exponential moving average, is 233.69. We're right above that level. We have not lost that level since the election, so that would definitely be a short-term red flag. This bearish MACD cross is getting closer and closer, and the question is going to be, are we going to close tomorrow below that level, losing exponential moving average support for the first time in 2017, in which case next week we will be looking for potential bearish TCG cross of this 4-period exponential moving average over the 8-period to the downside, and a potential bearish MACD cross to go with it. IWM held up better than the S&P 500, and that's in part because we had a much more bearish follow-through yesterday with a dip way below the low of Tuesday, which we only saw a small dip below the low of Tuesday on the S&P 500. So we are rejecting from the exponential moving average resistances here as well. It was a stronger close. The 100-day moving average support is key going forward. That's 133.72, approaching 134 support, or that level will be approaching 134 tomorrow. If we lose that level, the likelihood of a bear flag heading down to the recent lows will be more likely as well. So clear exponential resistances to be watching going forward, and a big upper wick of profit taking by the end of the day. Key weekly middle Bollinger Band support of 135.41 that the bulls need to hold to maintain a higher low pattern. So support of 133.12, we broke it, but if the bulls can close over this middle Bollinger Band, they will barely be clinging on to hope to maintain this higher low pattern. So key day tomorrow on the weekly time frame here on IWM as well. QQQ also a lack of follow-through, rejecting on the back test to the middle Bollinger Band resistance, potential for a bear flag, it certainly looks like it, and even though yesterday seemed like all was well, the dump is over, you have to think about how much we gave to the downside, and then how much we gained back yesterday. And we can see the bulls to the upside got about, I would say, 40% of the dump back, but we're now seeing weakness. Support is 130.14 and 129.68. So it's going to be up to the bulls to get over these exponential resistances to give some confidence to the bulls in the short term. Otherwise, we are going to be looking at these bear flag setups, and because of the strong correlation between major names, major individual companies, and the S&P 500, we have tons of daily setups that have potential to be this bear flag before continuation to the downside. So we'll be watching very close to see if this bearish end of day momentum carries over into tomorrow. QQQ weekly bearish reversal candlestick, the most bearish week we have seen since 2017 began. So it definitely stands out. We are making note of it. Look at the volume as well. It's going to be the highest volume week that we have seen in at least a couple of months. So it definitely stands out to favor the bears. A red week next week will confirm the bearish reversal candlesticks for the first time on this weekly time frame in 2017, and for the first time since the election, actually. So we're watching very closely as this weakness comes in here, and watching into next week where this momentum is heading at the end of the day tomorrow. I appreciate you watching. I have a bearish lean on things, and I will quickly change my sentiment if the bulls can get over these exponential moving average resistances, but I'm looking to be testing some key support levels tomorrow, and I'll be watching the key financial and technology sectors for some clues. I appreciate you watching. Have a great night.